Wealth isn't built by luck. It's built by smart investing decisions. The difference between average people and wealthy individuals is how they use their money. Smart investors don't chase money. They make money work for them. If you understand how they think and act, you can start building real wealth too. Smart investors do not focus on quick profits or short-term gains. They understand that real wealth is built over time through patience and consistency. Instead of reacting to market noise, they stay focused on long-term goals. This mindset protects them from emotional decisions and unnecessary risks. They invest with a clear vision rather than chasing trends. Long-term thinking allows compounding to work effectively. Compounding turns small investments into large outcomes over time. This process cannot be rushed, but it can be trusted. Smart investors remain calm during slow periods and avoid panic during downturns. Their patience gives them a powerful advantage over others. Over time, this steady approach creates lasting wealth. Smart investors understand that income alone does not create wealth. While earning is important, building assets is what creates long-term financial growth. Assets such as stocks, businesses, and real estate continue to generate value over time. Instead of spending all their income, they convert a portion into assets. These assets work even when they are not actively working. This reduces dependence on a single income source. Over time, assets begin to generate passive income. Passive income creates flexibility and freedom. Smart investors prioritize ownership over consumption. They build systems that produce income consistently. This shift from earning to owning is what separates them from others. Assets are the true foundation of wealth. Risk is a part of investing, but smart investors do not fear it. They manage it. They understand that avoiding all risk means missing opportunities. Instead of taking blind risks, they make calculated decisions. They study, analyze, and plan before investing. Diversification is one of their key strategies to reduce exposure. They do not put all their money into one place. This approach protects them from major losses. Smart investors also avoid emotional decisions during market changes. They stay disciplined even when conditions are uncertain. Over time, controlled risk leads to stable growth. Stability builds confidence and long-term success. Managing risk is what keeps their wealth growing safely. Consistency is one of the most underrated traits of successful investors. Many people invest for a short time and then stop when results feel slow. Smart investors understand that boring consistency creates powerful outcomes. They continue investing regularly regardless of market conditions. This habit removes the need to time the market perfectly. Over time, consistent investing smooths out volatility and reduces risk. It also allows compounding to build steadily. Smart investors do not rely on excitement. They rely on discipline. Discipline keeps their strategy working even during uncertain times. This steady approach creates predictable progress. Predictable progress builds confidence and momentum. Consistency is what turns simple strategies into powerful results. Smart investors never stop learning about money and markets. They understand that financial systems are always changing. Staying informed helps them make better decisions and avoid mistakes. They learn from both success and failure. Mistakes are treated as lessons, not losses. This mindset helps them improve over time. They adjust their strategies when necessary instead of staying rigid. Adaptability allows them to stay ahead in changing conditions. The more they learn, the more confident they become. Confidence leads to better actions and stronger discipline. Over time, knowledge becomes experience, and experience sharpens judgment. Continuous learning is what keeps their wealth growing. Smart investors understand that emotions can destroy even the best strategies. Fear during market drops and greed during market highs lead to poor decisions. Instead of reacting emotionally, they stay calm and focused on their plan. This emotional control protects them from panic selling or impulsive buying. They know that markets move in cycles and temporary changes are normal. By staying steady, they avoid costly mistakes that others often make. Emotional discipline allows them to think clearly under pressure. Clear thinking leads to rational decisions and better outcomes. Over time, this calm approach builds confidence and stability. Stability keeps their investments growing without unnecessary interruptions. Controlling emotions is a key factor in long-term success. Smart investors do not wait for the perfect time to invest. They understand that timing the market is difficult and unreliable. Instead, they invest consistently over time, regardless of conditions. This strategy reduces the impact of market volatility. It also allows them to benefit from different price levels. Regular investing builds a strong habit that supports long-term growth. Even small amounts invested consistently can create significant results. This approach removes the stress of making perfect decisions. Smart investors focus on time in the market, not timing the market. Over time, consistency smooths out risks and improves returns. It also strengthens discipline and commitment. Consistent investing is a powerful tool for building wealth. Smart investors avoid following trends or hype-driven opportunities. They focus on value and long-term potential instead of short-term excitement. Many people invest based on news, social media, or popular opinions. This often leads to poor decisions and losses. Smart investors take time to understand what they are investing in. They analyze fundamentals, risks, and future potential. This careful approach helps them avoid unnecessary risks. It also allows them to invest with confidence. Over time, value-based investing creates more stable and reliable growth. Avoiding hype protects their capital and reduces mistakes. Smart decisions come from understanding, not excitement. Value always wins over hype in the long run. Smart investors do not just earn returns, they reinvest them. Reinvesting allows compounding to work more effectively over time. Instead of spending profits, they put them back into investments. This creates a cycle of continuous growth. Each return generates more returns, increasing wealth faster. Over time, this compounding effect becomes powerful. Small gains begin to turn into large outcomes. Smart investors understand that reinvestment accelerates progress. It also reduces the need for constant new income. Growth begins to sustain itself through this process. Patience and reinvestment work together to build strong results. This strategy is one of the biggest reasons wealth grows exponentially. Smart investors do not constantly change their strategy based on short-term events. They create a clear plan and stick to it. Frequent changes often lead to confusion and inconsistent results. A focused strategy builds discipline and clarity. It helps them stay aligned with their long-term goals. When challenges arise, they adjust carefully instead of reacting emotionally. This stability protects their progress over time. Smart investors trust their process and avoid distractions. Staying focused allows their strategy to work effectively. Over time, consistency in strategy creates predictable outcomes. Predictable outcomes build confidence and long-term success. Focus is what keeps their journey stable and effective. The ultimate goal of smart investing is not just profit, it is freedom. As investments grow, they begin to replace active income. This reduces dependence on daily work and increases flexibility. Smart investors build systems that generate income consistently. Over time, this income supports their lifestyle and goals. Financial pressure decreases as stability increases. This creates a sense of control and peace. Freedom allows them to make decisions based on choice, not necessity. It is not about luxury, it is about independence. Smart investing creates opportunities that money alone cannot provide. In the end, wealth is not just about numbers, it is about control over your life.